For the last 3 decades, Knowledge Center at Bursa has offered technology, resources, services, space, and a sense of community. Since 1985, 14,000 titles have been collected, with care and attention to high financial literacy standards. In collaboration with a global community of institutions, we ensure access to the world's diverse intellectual and cultural economic heritage, as well as fast online services for connectivity to the financial world. Serving the Bursa Malaysia community and beyond, Knowledge Center at Bursa empowers you in your trading and investment analysis research.
Financial information at my fingertips.
Visit Knowledge Center at Bursa Malaysia today for the collections, for the services, for the sense of community.
Investing in shares today can be your gateway to financial freedom. To participate in the stock market, you need to open a CDS and a trading account. Here's a quick guide to help you open these accounts. A CDS account. CDS or Central Depository System account is fully owned and operated by Bursa Malaysia Depository. It keeps a record of the ownership and movement of shares traded on Bursa Malaysia. Simply put, when you buy stocks, shares are credited to your CDS account, and when you sell stocks, they are debited from your CDS account. In addition to a CDS account, you also need to open a trading account with a broker. A trading account is used to place your buy or sell orders in the stock market. Let us show you how to open a CDS account and a trading account in 3 simple steps. Step 1. Access Bursa Malaysia website and choose from any of the licensed stockbrokers listed on the website to open an account. Step 2. Once you have identified your preferred stockbroker, bring along your identity card and your bank documents to the stockbroker's office for verification. Step 3. Look out for a confirmation notice from Bursa Malaysia in your mailbox in the next few days. This mail will provide you with all your account details which you will use every time you trade. If you are new to the market and would like to learn the fundamentals of stock investing, please visit www.bursamarketplace.com. That's it! With these 3 easy steps, you are ready to start investing in the stock market and move towards achieving your financial freedom. Open your CDS account and trading account today. Happy investing!
Hello everybody! Welcome to this webinar brought to you by Bursa Malaysia and managed by LifeChamp. This is Shen Chu. I'll be the moderator for this session that is titled Short-Term Trading Using Bollinger Bands. So how are you guys doing? Now I'm sure you all have heard of Bollinger Bands one way or another because Bollinger Band is a very popular and very well-known technical indicators that many traders rely on to do trading. Okay, they use Bollinger Band to find signals for trade entry and also for trading exit. All right. So today we have invited the principal consultant for MSTA program, Tuan Haji Zainal, to come here to share about how do we use Bollinger Bands to do trading. Okay, how do we use it to find trade signals, whether it be buy signal or be it sell signal. All right, so we will delve deeper into this. As usual, disclaimer. So whatever we share on this Bursa webinar is only for educational purpose. So in no way that I give you any buy or sell call to any companies that should we mention in this program. So if you decide to make any investment decisions, you do it 100% at your own risk. So allow me to briefly introduce our speaker today. Haziq Zainal always come to our Bursa session, but today this is the first time in this year that he's going to do this segment in English. All right. So Haziq Zainal is a certified financial analyst and also a certified financial technician. If you can look at his title, you know he has a lot of qualification in the technical analysis space. Okay. He's a full member of the International Federation of Technical Analysts, IFTA. He's also a full member of the United Kingdom Society of Technical Analysts, UKSTA. He's also a full member of the Malaysian Association of Technical Analysts, MATA. He served as a senior vice president of Inter-Pacific Securities Sdn Bhd. He's also the pengerusi Koperasi Remaja Bumi Putra Berhad, mantan timbalan president Persatuan Remaja Bumi Putra, and former principal consultant at MSTA program. So indeed, we are very honored to have invited a heavyweight speaker to our Bursa webinar program to talk about Bollinger Band. All right. So with that, let me hand over the session to you, Tuan.
Thank you, Shane. Okay. Can you hear me?
Yes, loud and clear.
Okay. Alhamdulillah. Okay. Bismillahirrahmanirrahim. Alhamdulillah rabbil alamin wassalatu wassalamu ala asyrafil anbiya'i wal mursalin wa ala alihi washabihi ajmain. Rabbi shrah li sadri wa yassir li amri wa hlul 'uqdatam min lisani yafqahu qawli. Okay. Assalamualaikum warahmatullahi wabarakatuh, and a very good evening to all of you. You see, yes, thank you, Shane, for being a moderator today. Yeah, nice to see you after a couple of months, I believe, for the last session that we have. Okay, and thank you to Bursa Malaysia Academy for sponsoring this event, and also thank you very much to all the participants today that you spend your time today to learn something about the technical analysis, and perhaps it might help you in doing your trading. And also thank you to LifeChamp that to organize this session, and also thank you to whoever that involved in the today's session. Okay, just for your information, that is all of this in the here that we are streaming through the Zoom and also through the YouTube. Okay, so you can follow us at the YouTube or to the Zoom. Okay. And you want to ask any question, perhaps you can write at the chat, at the live chat. Maybe I believe that somebody will answer you. Okay, today what we're going to do. Okay, the first thing is that I will talk about Bollinger Band, and after that, the strategy or how to use Bollinger Band in trading, and then I'll give you some examples, and then after that, followed by the Q&A sessions. So I believe if you want to have, you can prepare now your questions. You want to have any question, perhaps toward the later time. I think by about 1 hour. After 1 hour, you can ask questions. What kind of question you can ask? I'll try to answer all of your question if I can. If I cannot answer, I cannot answer. All right. Okay, so let's go to the what we are going to what again I'm going to share with you today.
All right, Tuan, you need to share screen first.
Yes. So wait. Where is it?
Yeah, got it.
Got it. All right. Okay. So I believe a lot of traders, actually most of the traders, if you use a technical analysis, if you use a chart to do or to choose or to timing your trade, I believe that you should know what is the Bollinger Band, you see. But there are some people or there is some the way they use is not really correct. But today I will share with all of you how to use this Bollinger Band. I will introduce you what is Bollinger Band all about, and then what is the strategy that you can use. And if you have time, I will show you a little bit of advanced technique of using a Bollinger Band. Okay. let's go. First one. Okay, this is a bit, okay, you have seen this. All right, now. Okay, short-term trading using a Bollinger Band. Okay, first of all, I need to define what is meaning of the short-term trading. Okay. Some people, to different people, it mean a different thing, you see. But today, when I talk about short-term trading, it means that it is not intraday, but it is in terms of maybe the most is about maximum about 2 weeks to 1 month. That is what we call a short-term trading. If a medium term, we talk about 6 months. If a longer term, we talk about 1 year and above. That is a longer term. Okay. If daily, then we talking about what we call is intraday. So next question, can Bollinger Band be used as intraday? Can Bollinger used as a short term, or can it be used as a long term? Well, the answer is that it can be used in any kind of time frame. See? But the way they use it is different in different time frame. Okay. So before we go to the Bollinger Band, you see, I just want to introduce to you what is the band, what is actually a band, you see. Usually we call it trading band. Trading band means usually there's a line that is plotted around the price, a structure to form an envelope. Envelope means usually have a line at the top and at the bottom. That's called envelope. And of the action of the price near the edge of the envelope that is interested in, which means that you're talking about when the price moves towards the end of the envelopes, which means at the top by the bottom. That is what you are very interested one. Okay. And one of the most powerful concepts available to the technically based investor. And this envelope you use a lot, especially in the like forex trade and all that, you see. But also you can use in this trading of the equity. Okay. Answering not whether absolute buy and sell signal are being given, but whether the price are high or low on relative basis. That is the purpose of envelope. You see, it's not that you are talking about they give you a buy signal or sell signal, but they will tell you, what envelope will tell you is that whether the price is high or the price is low. Okay. Trading band can be, for one, whether to buy or sell by using indicator to confirm the price action. So what to do? That we use an indicator to confirm to buy or to sell, that using by looking at the price and the envelope. Okay. Next one. So another one, you see, the first one just now mentioned just now is about the price envelope, which means that we give an envelope or we create an envelope using the price. But to make it smooth, we use moving average envelope. So the purpose of moving averages is to smoothen the price action. Okay, now the usefulness of the single moving average can be enhanced by surrounding it with envelope. Can we use a double moving average? The answer is yes, but sometimes it's become messy because there are so many lines. Unless you know what you're doing, and then it can be done. You see, and percentage envelope can be used to help determine when a market has gotten overextended in either direction. You see, that is what we are looking for. What is it? Overextended. That is the purpose of envelope. Okay. In other words, they'll tell us when the price have strayed too far from their moving average line. You see, in order to do this, this envelope has placed at the fixed percentages above and below the average. So that is the purpose of the envelope. Shorter term traders, for example, you can use 3%, which means that you put 3% and the envelope is a 3% above and a 3% below. Around 21 days moving average. That's why we call it a short term. Usually it's below 21 days or below 20 days. Usually we call it short term. If you want to have a medium term, you can use 40 days, or you can have a longer term, you can use perhaps 50 days or 90 days. This is up to you. It's up to you to use. You see, depend on the instrument. Different instrument have a different optimum N level, which N means is the number of days. When the price reach one of the envelope, for in this case, is what 3%, from the average, the shorter term trend is considered to be overextended. What does it mean? Is that which means that once the price hit the upper envelope, which means that we call it overextended. This is very important because later I'll show you why it is very important. Okay. For long range analysis, some possible combination includes there is a 5%. Either you have 5% envelope around 10 weeks average, or 10% envelope around a 40 weeks average. So it's longer term, and then you increase the size or the percentage maybe to the higher number, and also the moving average for the longer period. Okay, this is an example. This is a 3% of the envelope in 21 days moving average. It's not much different whether you use 21 days or use 20 days or use 18 days. It's not much different. It's up to you. Okay, basically, this is how is it? Can you see that? Call is extended. Okay. This is 5 days, 5% on the 10 moving average weekly. This the 10 weeks moving average. So longer term trader, perhaps should be, or and then you put higher goes go up, you see, and then just keep on going up.
Yeah, I think just now your line dropped for a bit. So I think many people also can't hear what you said for the past 1 minute or 2 minutes. Maybe you want to repeat.
Okay. I'll come back again on this 3%. Okay, what's the problem? Oh, I think in here my speed of internet here is quite strong here actually. Okay, never mind. All right. Okay, let's say I repeat again. Okay, sorry for the interruption. Sorry for the okay, let's say now. Can you hear me clearly now? Shane?
Yes, can hear you clearly now.
Okay, all right. So I repeat again. Okay, this is a 3% on 21 days moving average. See, the one that is we are interested is when it overextended. Overextended means which means that either it is above the top envelope or below of the top envelope. For example, like in here you can see that one is it goes above the top envelope, the price will go higher. So that is what we want, what you're looking for. Okay, this is a 21 days. If for longer term, we use 5% on the 10 week weekly. For 10 moving average, we use 10, or you can use also 10% on the 40 weeks, 40 moving average weekly basis. So each bar here actually is a weekly. You see, so each bar weekly means which means every bar that you can see here, it is a weekly. Okay, usually. When we do or when we draw this envelope or Bollinger Band, usually we use the bar chart, so that is not so messy. But I would prefer I prefer to use candlestick rather than a bar chart, because I want to see the price action at the candlestick, whereby that I can see it more clearly, the direction of the market. Okay, so asking the market what is happening is always a better approach than telling the market what to do. What does it mean? It means this way: Bollinger Band or moving average actually is a trend following. This is what we call is a trend following system. You see, trend following system which means that we are looking at it and we are trying to read what is the market are trying to tell us, or what is happening now, not something that is in future. But of course, when you talk about forecasting, you need to know the current situation, only that you can forecast the future. I'm telling you this here. Why? Because there are different techniques, what we call trend forecasting, whereby they forecast the future trend. For example, like Gans technique, Elliott wave. This is what we call a future, or we call it the trend forecasting technique. This Bollinger Band, moving average, this is what we call trend following technique. Of course, there is a pros and cons, you see, but then today I'm not talking about this, what is the pros and cons of this, what we call a trend following technique, but today we will be focused on how to use this Bollinger Band. Okay. So when answering this question, you see, trading band will answer this question, that whether the price are high or low on relative basis. Relative basis means at that particular times, which means that, for example, it's not a question whether it's just in terms of price. Let's say now, today is 1 ringgit, yesterday is 50 cents. Is it higher or lower? Yes. Of course, if you compare that between yesterday and today, yes, today is higher. But then when you talk about relative, which means that it's based on the moving average, whether it's high or not, and that based on the envelope. So which means that we said that the price is high when the price overextended. That's what it means. It's not the question of whether it is in terms of the absolute numbers. Okay. Trading band do not give absolute buy and sell signal simply by having been touched. Rather, they provide a framework within which price may be related to indicator. Okay. If price tag the upper band, so which means they hit the upper band, and indicator action does not confirm, that is divergent, we have a sell signal. So it's not necessary, you say that we don't use this, what we call band, whether it's Bollinger Band or the moving average band, you see, it's alone. So we use it with the indicator. So the first situation is not a sell signal. Instead, it is a continuation signal if a buy signal was in effect. So it depends whether you have to use some other signal, for example, like volume indicators or some other indicators. Okay. Now only we go on the Bollinger Band. What is Bollinger Band? Okay. This is a Bollinger Band. Okay. I believe that all the traders here, they always see this kind of Bollinger Band. They have seen it before. See, there's a difference between the Bollinger Band and the envelope, or what we call is a moving average envelope. You see, if the Bollinger Band is different in term, if you look at it, it's different. If, for example, like you can see that this is a envelope or moving average band, whereby that the band is the same size because it's only 5%. For example, this here in this case, but the Bollinger Band, you can see that is some of it the bigger or expand, some of it is a contract. So there is a contraction and there's a expansion there. Okay, so Bollinger Band are plotted in 2 standard deviation above and below a simple moving average. Okay, this Bollinger Band is introduced by John Bollinger. John Bollinger, I met him before a couple of times. That he's a very nice guy, and that actually I asked him how that you discover this Bollinger Band. So he said that actually he is looking for the how to measure the volatility of the market. See, so this Bollinger Band, the purpose of the Bollinger Band is to measure the volatility of the market. That is the main purpose of the Bollinger Band. So as the beginning, but now there's a lot of ways to use the Bollinger Band. Okay, so they use the 2 standard deviation. So the next question, why 2 standard deviation? Why not 1 standard deviation? Why not 3 standard deviation? Okay, if you use 1 standard deviation, it will what we call which means that it will take all roughly about 68% of the total data. Let's say, for example, that 1 week, so they'll take about in this case is 20 days, so which means that he will capture roughly about 60% of data if 1 standard deviation. If 2 standard deviation is about 95%. If 3 is about 99%. So that in the Bollinger Band, we use 2 standard deviation. Can we change it? Yes, it depends on the instrument. For example, like in Bursa, some instrument or some stock, sometimes I use is 1.8 standard deviation. So it depends because we become less volatile and all that. So, but usually if for the beginners, 2 standard deviation is okay. So stick to the 2 standard deviation. Okay. So, and Bollinger Band can be applied to any market or security, whether it is equity or a commodity or interest rate or this CFD or this Forex, you can use this Bollinger Band. So you can apply Bollinger Band to any kind of market as long as there is a continuous price. Of course, it's not easy for you to use Bollinger Band to track the price of the house or to track the price of antiques, for example, and it's a bit difficult. But then on other instrument that is have the continuous price, Bollinger Band can be used. Yeah. This technique developed by John Bollinger, and now he trained his daughter. Yeah, what's his name? What's her name? Daughter is Joey. I think it's Joey, and his daughter is Joey. And I still remember, yeah, his wife, his wife is what? Dorit. Okay. Two trading band are placed around a moving average to the envelope technique. Very similar to the envelope technique. The only thing is that instead of using a percentage, they use 2 standard deviation, above and below the 20 days. Okay. And standard deviation actually is a statistical concept that describes how prices are dispersed around the average value. So it's 2 standard deviation, they will get about roughly, they will capture around 95%. Okay. Yes, in here. So between the standard deviation ensure that the price data will fall between the 2 trading band. Okay. As a rule, prices are considered to be overextended on the upside when they touch the upper band. They are considered overextended on the downside when they touch the lower band. This is the basic concept of the Bollinger Band. And Bollinger Band is differ from the envelope is that whereas the envelope have a constant percentage and the Bollinger Band is expand and contract based on the last 20 days volatility. Okay, that's why we say Bollinger Band. John Bollinger used this project, or he invented this Bollinger Band because to measure the volatility. Okay. During the period of a rising price volatility, the distance between the 2 bands will widen. So which means that they will be expand. And conversely, during the period low market volatility, the distance between the 2 bands will contract. For example, as you can see, in this chart, that you can see that this is what we call a contraction, and this is what we call the expansion, and this is a contraction. You see, as you can see before the when it is one of the way that we use this Bollinger Band is that we'll get ready, or this Bollinger Band will give you a signal or a warning that is going to expand, or the market is going to move, whether it's up or down when it contract. For example, you can see here, after the expansion, you see, and you can see that the band getting narrower and narrower, and after that it start to expand. Okay. So that also you can use that as one of the way of your trading signal. Okay. There is a tendency for the band to alternate between expansion and contraction, and when the bands are usually far apart, that is often a sign that current trend may be ending. What does it mean? It means that if the band expand too big, or is start to expand, which means that trend is going to be over, or is telling you that the trend is ending. The trend is ending. For example, you can see here, that is when it's come down all the way, you can see that there is a huge distance between this top level and the lower level. This is saying that the trend is going to end. Same thing also here when this is going up, you can see that there's a huge or there's a big difference between the distance between the upper level or upper band and the lower band. So you know that the trend is going to end. Yeah, this is to end. All right, next. Same thing also, when the distance between the 2 bands have narrowed, which means that is a contract, then it's often a sign that a market may be about to initiate a new trend. For example, like in here, Okay, let's see, can I point to option pen? All right, in here, I give you an arrow here. You can see that this is where that we call a contraction. There is this contraction. Okay. All right. So how to use a Bollinger Band as a target? Okay. Remember, this is the first one, the usage of the Bollinger Band. So which means that will tell you whether the trend is a beginning of a new trend and ending of the trend. So there is a usage of the Bollinger Band. Okay, one. Next one, the second one. We can use Bollinger Band also as a target. How? The simplest way to use Bollinger Band, to use it as a target, is that we use the upper and lower band as the price target. For example, okay, we use, let's see, okay, okay. In other words, if price bounce off the lower band and cross above the 20 days average, the upper band become the upper price target. What does it mean? It means this way. Let's say now the price now is drop below the 20 days moving average. The center line is 20 days moving average. The top and the bottom is a 2 standard deviation. So we use these 20 days, or we use this center line as a signal line, whether the price is moving up or the trend is up or the trend is down. You see, uptrend or downtrend. Okay. When it, okay, you look at it, for example, right here, when the price drop, okay, let's say, where is it? Let me put here. Okay, as you can see, the price drop. Okay, the price drop, and then it cross. You look at here, there is a here, it crossed the 20 days moving average. So that is the signal, or there is a buy signal there. So now, when there is a buy signal, where is the target? The target is that one is the upper band. So this is at this level, at this our band is here, so that is a target. This is close here, this is a target. So this is the initial target. So as indicator. The next one, let's say for example like here, because of course this here is it cross here, and then the target is at the upper here, so somewhere here. So that is how that we use the target, for using the target as the using the Bollinger Band to determine the price objective. It's not necessarily that you sell at that particular level, but when we see when the price cross the 20 days moving average, which means that there is a change of trend from downtrend to uptrend. Next question, if it's now uptrend, how far it will go? So that we use the upper band as a price objective. Okay, it's written here also that is a closing below 20 days average would identify the lower band as the downside target. Same thing also, which means that once it's crossed the lower band, the 20 days, so the lower band or the lower band will become the target. In a strong uptrend, price usually will fluctuate between the upper band and the 20 days average. In that case, a crossing below the 20 days average, one of a trend reversal to the downside. Okay, for example, like this, when the price goes up, you see the price will all the way up, and then you can see there's a crossing. This is what we call as a signal that is the trend is changing from the bullish to bearish. This is when the price cross the 20 days. As you can see from the crossing here, let's say it's sideways, see, and they start to move up, the price all the way move up, and they start the crossing and the price come down. In that case, a crossing below the 20 days average, one of a trend reversal to the downside, like this one. You see, for example, like in here, that is here, which means that is a crossing here. You can see there is a crossing here. There is a crossing there. All right, it's a crossing here. Okay. It is also possible to generate a signal from price action within the band alone. A top formation formed outside the band, followed by the second top inside the band, constitute a sell signal. Okay, this is also very powerful signal, which means that the market are telling you using this Bollinger Band that it is already topish. Okay, what is it? How is it? Okay, for example, okay, let's say in here. Okay, you look at here. There is a. I'm looking at here. All right. See, it shows that the first one or the first up or the first top is outside of the band. You see which one is exceed the band, which means that overextended. But the second top, is it the second top here? It is inside, or you can see also here also in the second top here inside the band. So it will show that, which means that it is a sell signal, which means that they tell this using the Bollinger Band is saying that the market already reached at the top and it start to come down. Instead of you have to wait till the price drop below the 20 days moving average. Because it's setting about quite some time, is it? About how many days here? I think a lot of days here before it cross the 20 days moving average. Okay. There is no requirement for the second top position relative to the first top, only relative to the band. So which means that the first band, the first price outside the band, the second price inside the band. So that you show that it's already top, market's already reached the top. Okay. Same thing also when it is the other way around, or what we call when the price or when the reverse of it. For example, all right, for example, like in here also there's yes, you can see here. Here also you can see by that this the price drop below the lower level or lower line, which is what we call is overextended, and the second bottom is inside the band. So it shows that the trend is changing. All right. Now I'm going to tell you the trading method, how to use this Bollinger Band for your trading method. Of course, by spending time today, I think just for a couple of maybe about 1 hour or maybe about half an hour, it don't make you become expert in the Bollinger Band, but you need to practice. The first thing that you have to do is that we learn about the technique. The second thing that we need to do is that we practice. The right practice will make perfect. Okay, method 1. Okay. Buy when the upper band is exceeded and short when the lower band is broken to the downside. Okay, of course, in this area of Malaysia, you cannot short. This is you're talking about if you are trade in equities and all that. Okay. Buy when the upper band is exceeded which means that, for example, like here you can see that is the price break the upper band, and you can see that it always at this upper band, or we call it walk with the band. This is what we call walk with the band. So which means that the price is rising. So that is where that we buy. We buy, if you remember, one is the price exceed that level or exceed the band. That is we show that it is overextended, and that is where we write on that. And the downtrend, for example, like this, which be like this, where that the price hit the low band and is keep on dropping. This is one of the way of what we call is method 1. Method 2, trend following. Okay, trend following here means that, which means that you use the middle line. Once the price break the middle line, and then that is where that we enter the market and we just follow the market till it change the direction. Second method. The third method, buy near the lower band using W pattern and an indicator to clarify the setup. Okay, this is the one that I'm talking about, whereby that you can see that, for example, like here, in here, whereby the price break the lower line. See the lower line, and the next one is that the next low is inside or sometimes if you look at it here closely, actually there is what we call it like this. Let's see. Okay, is if you can see here, actually is here a W here. You see here got W here like this. You see this is a W actually here, there, and there is W here. See, whereby this second here, this second leg of the W here inside the band. See, so that is where we show that the price is going to reverse. The first leg of the W is outside the band. The second leg is inside the band. Okay. And you have to use the indicator to determine whether it is really a reversal or not. So you can see here, there is a reversal here. There is I'm in here that I show here. Here is there are two indicators here. You can use one, you can use two. It's up to you, basically. Or you can use RSI. But in here, in this example, I use stochastic and also MACD, MACD. So you can see here it shows that there is a reversal here of a change of trend for this MACD. And then this is also a buy signal from the stochastic. So this is a good reversal. Of course, you can wait until it cross the 20 days. Also can, it's up to you, but this is a early signal. Some traders, they use this as what we call as a warning. Warning, which means that, okay, there is a trend changing. So they wait for the price to cross the 20 days, only they take action. So it's up to you, basically, whether you want to be in the early or lower. Of course, early is the profit margin is higher, but it's higher risk. But when you cross the 20 days, the profit margin is lower, but it is much safer. Okay. So that's all my presentation. Now we look at the real example. Let's see. Okay, let's see. All right. Let me share with you the screen. Okay. Okay. This is LBM KCI. It's LBM KCI. As you can see, is using the 20 days moving average. This is 20 days Bollinger Band. Okay. So as I said earlier, 20 days Bollinger Band is considered a short term. Okay. You look at the chart, you look at the index first before we look at the shares. Okay, let's see. Okay. How is it? Okay, the first one, remember, there is what we call it a overextended. Okay, for example, okay, where is over? Yes, this one. For example, here you can see that there is overextended. Here, there is where it is overextended. It crossed the line, or what we okay. The first one, contraction. There's a contraction here, and it goes up, break the upper level or upper band, and it goes up. And this is what we call walk with the band. So which means that one is the line or the top one is broken. So which means that the price will go higher. And this one also you can see here, this is a whereby that you can see that the price is going lower. By just looking at here, just looking at the formation that this from Bollinger Band, the Bollinger will tell you the price is, or the index is going lower. How? Remember that I mentioned just now, that is the first tower or the first up is outside the band, this one, and the second up or the second top is the inside the band. You see, this is one, and this is, you see, this one at the top, which it goes up and come down inside, and it goes up again. But this second top is inside the band, so it shows that the price is, or the trend is going down. Right? Because in here it's not very clear. It's not very clear here. Here is quite very clear. You can see that it's come up. The first one, the second one, and the second one is inside the band. Okay. So that is Bursa Malaysia. Let's say okay. This is not a buy call. This is just an example only. Okay, just example only that how we use this Bollinger Band. Okay. Of course, when you talk about trend following, you see, remember this. When you talk about trend following, the most important is the trend. So the question is that, is it the trend is uptrend, or is it a uptrend, or is it a downtrend? Okay. So when it is uptrend, you see, just make sure that you follow it is uptrend. Or what I mean is that don't don't ask the market what to do. See, we just look at the market and try to read what the market is trying to tell us. For example, okay, the price now is what we call is walking with the band, which means that it hit this level. So which means there's a buy signal here, and it goes up and it comes down like this. Okay, and then after that, let's see, because let me make it bigger slightly. Let me be make it bigger. Okay. And even though you see, as you can see here, there is lower here, but then the trend is still up. The trend is still up. So which means that is uptrend. Just go all the way, or which means that we ride on the trend till the end. Until you can see, for example, here you can see that it's a contraction here. So what is contraction? The contraction means that there is a possible, or the Bollinger Band are telling you that the trend might change. So as you can see that when the price drop below, and it's a, we call it walk with the band, which means that the price break the lower band, and this is what we call it's going down all the way. So this one is going to open a breakout. You can see that, and wait for, I think for another worry, what will happen. Is it the same thing going to happen like this or not? And then you have to wait and look at it. Okay, there is, what is this? This is Specca group. This is not a buy call. This is just example only. Okay, let's see, have some, is there any other counters that is, okay, let's say, this order. This is evergreen. Okay, let's say take this B plastic. Method 2. Oh, somebody asked you to repeat the method 2. Where is it? Method 2. Okay, all right. Let me share again, because this one is slightly different. All right. This method 2. Method 2. Okay. Hang on. Okay, this is method 2. This method 2, because just now somebody asking about this green line. So the method 2 is, which means that we follow the trend, which means that if it goes up above the 20 days moving average, and we just follow and ride the trend. Okay, let's say we go and the real example. I think it's easier for me to look at it, for me to explain. Okay, let's see. This is share screen. Okay, all right. Okay. What counter to look at? This B plastic is not a good example, because you need to have a counter that is Let's see telecom. Is it telecom? Is that? All right. This is for example, that we use this Bollinger Band. It's a Bollinger Band, as you can see, when the price cross the 20 days moving average, see, and you just write on moving average till it break the, or till it cross the, from the top, the 20 days moving average. So that, which means that you buy here and you sell here. So that is where that is just like a similar to that we use 20 days moving average, and we just write on the price using the, or what we call it, just by looking at the trend. So also it can be used. Somebody asking about this line. Okay, now this is how that I use the Bollinger Band. Okay, when I use Bollinger Band, I add another line that is a 5 days moving average. So next question, can we use, or we can add, is there any other thing that we can add? That the answer is yes, we can do whatever it is. Why did I put this 5 days moving average? So that it can become a filter. I use the 5 days moving average on top of the Bollinger Band for the purpose of filtering. What does it mean of filtering? It means this way. All right, let's see. Make it bigger so that you can see clearly. Okay. The first one is by signal. Okay. The first one is by signal. Okay. Sometimes it's a bit difficult, or it's a bit hard for us to determine, or for us to see whether it's already crossed or not. Especially if you look at here. Okay, let's say we replay. Okay, let's say we replay this 16th of June. All right. Okay. Let's say we replay. Okay, right at real time. Okay, so you can see it is already crossed. You see, it's already crossed. It's already crossed. Okay. If using Bollinger Band, can you buy? Yes, we can buy. But there is no. There is what we call the band didn't expand yet. So which means that you still, yes, you can buy based on the center line. But in here, what we call is the market actually is a sideways. All right. We continue. Wait for it to expand. There is, you can see that there's a volume to come in and it start to expand. So that is a buy signal. Okay. But the problem is that, is it a good buy signal or not? So that is why that we use the 5 days moving average to tell you whether as a filter. So yes, now the 5 days already above the 20 days moving average. As you see earlier here, you can see that it's a sideways. Okay, wait for the band to expand. There you can see that the band start to expand. So it shows that the new trend is beginning. You can see there. So next question, what is the purpose of this 5 days moving average? Okay, wait. Let me go higher. Let the price goes higher, and then I tell you what. As you can see, the price keep on rising, and the price all the way above 20 days moving average. So it's still rising, expanding, it's still extend. Oh, I got to make it smaller. All right. Okay. Now you can see. Okay. Now, you see that now is that the price or the 5 days moving average cross the 20 days moving average. That is a selling signal. That is a selling signal. So that we use this Bollinger Band and we use this 5 days and the 20 days moving average. Of course, there's a lot of other ways for us to do that. For example, like let's see, there is for example like this. Wait, let me see whether whether have anything or not. Let's see. For example, like shorter term, it is short term, because short term, which means that I said earlier, one of the technique, one is that when the price extended, and the next one, or the next tower, or the next top is inside. For example, like you can see here, this is extended outside the band, and this one is inside. So it tell you the price is going down. You see, it just price is changing. Same. Got any some more? Let me see. No more. No. Okay. All right. Okay. Right. There is no. Let's say we choose other. Let me see. They got some other stock or not. The plastic, Pintaras, Evergreen. No, Evergreen is too small. JAG. Okay, let's see JAG. Okay, so this is not very good. Okay, not very good. Some okay, JAG also not very good example. Yes, it can be done, but it's not very good example. JAG, because you need to have a Pekka was a nice one. Okay, let's say the next. The next can have oil. The next is a bit sideways too much. Okay. For example, like this is what we call is walking with the band, which means that the price overextended and it goes up, overextended, and also this is what we call the band. The band start to expand, the band expand, and the price is overextended and it goes up all the way. This goes up here, and then after that you can see here there is the tower here. You see that this is outside. The top here is outside, but the second top is inside the band. So they is telling this is the band, the Bollinger band are telling that the trend is for this, it is going down. So that is why the price, you can see of that this is going down. Same thing also in here, whereby that this top is outside, but the another top, the second top is inside. So this is also telling you whether the band or what we call the price is going down. Okay, so now I want to open for the Q&A. You have any question? Perhaps you can ask a question.
Yes, if you have any question for our speaker today, Tuan Haziza now, you may write in the Q&A box. So Richie would like to ask, how well did the Bollinger Bands able to explain the IP Muda price movement from April 26 to 27 and November 11 to November 12?
November 11, April and November. Okay, let's see.
Okay, you see the question, right?
Muda, okay. April
26 to 27.
April 26, April 26. Okay. And April 27. Oh, these two. Okay. And the next one?
November 11 to November 12.
November 11. Okay, good. November 11 and November 12. All right.
Yeah, maybe you want to share screen so we can.
Okay, wait. I show the April first. I will show you the April first. April. Okay, this one. I'll share the screen. Okay. First of all, the Bollinger Band is a trend following system. When we said trend following system, the most important is a trend. That is most important, which means that whether it is uptrend or downtrend. That is the first question that we have to answer. Is it uptrend or is it downtrend? That's the first question. Okay. So now, when the price is based on this, based on this chart, on the April of 2021, you notice that let me hide the 5 days moving average first. Okay, this is a pure just all the Bollinger Band alone. Okay, the first thing is that it is sideways. You can see it sideways. Yes, sideways, and it is a contraction here, and there is an extended or expansion here. There's a question. So this is the if you use some other technique too, which means that this is a breakout. There is a breakout. You see, there's a breakout here. The breakout from the previous high. So this one is how many days breakout? This also is a breakout, and this is a good breakout whereby it's a breakout of the previous high. This is a breakout here. This is a breakout previous high with the volume. You can see that the volume is big, and this breakout first. Okay, Second thing is that the price now is above the 20 days moving average. So there is what we call this a uptrend. The third one using the Bollinger Band, it is overextended because the price is above the line. So this is which means that is saying is the based on this that we know that the price is going up. Okay, now of course the next day the price come down, but still, for example, if the price is going down, yes, after that, but then the trend are still rising. If you notice that the price all is above, all the way above the 20 days moving average until it drop or break below on the 23rd of June. So this Bollinger Band is a trend following. The first thing you have to look at is what is the trend, whether it's uptrend or it is a downtrend. That is the most important. Whether you're using a Bollinger Band or using the moving average or what, all of the moving or all the trend following system, we want to see what is the trend. Okay. So based on this is what happened. Okay, that's what happened on the 26th and 27th. Of course, unless you want to use shorter time frame, and then it's a different story. Because for example, like this Forex trader, they will see, or they want to see the whole picture. So they will use a lot of screen, and they will use weekly, a daily, 4 hours, 1 hour, and also tick chart. So they use at least about 5 screen. So only they can see, and they want to see the confluence of all of this, only that they decide whether they want to be in the market or out of the market. But of course, the equity, that is usually you can use 1 or 2 screen at home or in the office. Also, I have 2 screen, but I only see whether it is I have only 2, weekly and daily. So based on this, that's happened during this time. Okay, next one. When is it? November
11 to November 12.
November 11 to November 12. All right. Okay. Let's see. This one is, let's say we put that lower time frame. Okay. If you look at the daily time frame, it's very difficult for you to see. You see, it's very difficult for you to see because this it muda, you can see that there is okay, different counter. Is the behavior of that counter is different. The behavior, if you can see that this counter is not it's not continuous. Continuous means you can see, look at the volume. You see the volume is sometimes a big volume, sometimes small volume. So which means that there are somebody playing this kind of stock, which means there are somebody playing this stock, or we call it a syndicate. We call it as a single counter or a single syndicate or single shareholders or buying whatsoever, which means that there are somebody, which means that are doing or something, having a hand inside this kind of counters. That's why it's a bit difficult for us to use any kind of technique. But being said that, if you look at the shorter term, the shorter time frame, you can see the same thing. For example, here I use 30 minutes. Then you can see that the price, make it, let's say I make it bigger. All right, this for example, and then I make it okay. Then you can see also, you can see that the price is already broke the 20 days end, or this one in this case is 20 times 30 minutes. This is on the at 2:30 on the November 12th. So still you can use the Bollinger Band, but of course this one is in a shorter time frame. This is what happened. Okay, next question.
All right, thank you so much, Tuan, for answering this question. So the next question is asked by Habiba. What is the difference between Bollinger Band and KC?
What's KC?
Yeah, probably Habiba can explain what is KC.
Yeah, maybe yes,
Okay.
Bollinger Band. KC, what's KC?
All right. So
oh, I see. I think Candle Channel. Candle Channel.
oh,
That
okay.
is quite. We are talking about the Bollinger Band. You see, maybe at some other time maybe we talk about the Candle Channel, because this is all a channel. Basically, you use a channel, whether you use Bollinger Band or Candle Channel, basically is not much different. But of course, the way they calculate, the way the objective, all is different. But usually, if you are talking about the channel, of that is almost the same way of how are we going to determine or what is the purpose of that channel.
Just algorithm difference lah.
Right? The calculation is different.
Okay. The next question is asked by Badru Huzaimi. Tuan, is there an opposite to the W pattern? For example, if the market is ending a bullish run, then there is a M pattern perhaps?
Yes, there is. Yes. Let's see.
So M pattern will appear at the upper band.
Yes, M pattern will appear at the upper band.
So that will give us signal to short.
Yes, that's right. If you want to short.
So that's method 3.
Yes, method 3. Method 3. For example, again, let me see, got any of this. Okay. Sometimes you can see very clear, sometimes it's not very clear. But then the method 3 is remember that the top is at outside. For example, like this, you can see that here, make it bigger. As you can see that, okay, we do it here first. Okay, and you see this is what we call is overextended, and the price keep on rising above. You see, keep on rising above. But once the price goes inside goes back inside the band, which means that the price is going to be lower. Yeah. Of course, in here, say, but then it's very difficult for us to determine. We must have a certain what we call certain rules. So how is the rule? Is that we have to look at it overextended, or when the price exceed or goes above the upper band, and after that the price come back again inside the band. So for example, like here, this is the top, and this is second top. You see, the top here, the first top is outside, this outside, but the second top is inside. So this is telling us that the price is going down, which means that, or other word, which means that what we call the market is not strong anymore. Market is weakening already. It starts weakening. So that's how we use. Remember that I told you that this Bollinger Band is used to measure the volatility. That's the purpose. So the volatility can be up and can be down. So when the price, as you can see that for example, like here, very clearly you can see here, whereby that the price is moving up. So there is a very strong volatility is going up. So you can see that it's what we call here walk with the band. We say the price that is above the upper line. Remember, just bear in mind that this is this band actually is the what we call a standard deviation, whereby it captures about 95% of the total data. So which means that now that all the data is going up with this very high volatility. That's the reason why the price like this, it goes up. When the volatility start to come down and then you come inside, it will be the price, or the price action will be inside the band. That is why the Bollinger Band, we have to use it with some other indicator. Usually we use this, we use that, we use at the middle line. Okay. there are a few ways for us to use this Bollinger Band. You see, I explained much earlier. The first one is that, of course, the center line. We use the center line for the signal to buy and sell. One. Second, we can use the overextended, which means that once there's a price break the upper level, so that also is a buy signal. Or we can use the band, which when it's a contraction and they start to expand. And here, for example, there's contraction here and they start to expand. Also, this is also where is the buy signal. And the sell signal, whereby when the price or the tower, the first tower outside the band, the second tower is inside the band. So it shows that the volatility is now is not as high as the first tower. It's slower now. It's not as if it's going down. You see, for example, like here, you can see that it's going down, but then it's still uptrend because it's above the 20 days moving average. So it depends. If you are a short-term trader, you can perhaps you will exit the position. But if you are a medium-term trader, yes, you still hold the position because the price is still above the 20 days moving average. That is why I always use this 5 days moving average as a filter. So as long as the price is within the 5 days moving average, or when the 5 days moving the price is above, or the 5 days moving average above 20 days, so we know that it is still uptrend. When it starts to come down, then you know that it's a game or the trend is over. Okay, next question.
Okay, so we can do this kind of variation to give us some kind of signal. The next question is by Siti Nubaya. Is Bollinger Band effective for short term using time frame 30 minutes?
Yes, that's right. Because there's a lot of people that use this short term, but usually we have to put more lines. For example, like let's see.
Tuan, are you there?
Wait, I'm still here.
Yeah,
something
just
wrong.
now we were losing you for a minute.
Wait, can you hear me?
Yes, it works fine now.
BBMA. Okay, let me clear all of this first. All right. If we use, let's say now we use, for example, like 30 minutes. 30 minutes. So you put more lines. This is more advanced technique. This is more advanced technique. We call it BBMA, advanced technique, whereby that we have to look very closely all of this line. But this one is, of course, is advanced technique, very advanced technique. If you want to use it, for example, on this simple technique, you also can use, for example, like this. Okay, this is daily. This is 30 minutes. 30 minutes. Okay. Same thing also that you can use, or use the same principle. Use the same principle, but when we use it for the short term, the first you have to look at is the daily. Is it up or is it down? That's the first thing. Uptrend or downtrend? Okay, now is uptrend. All right. Now we go on 30 minutes. So what we are looking for? We are looking for the confluence. Confluence which means that the daily is up and now the 30 minutes also up. So where is 30 minutes up? You can see that then it crossed the 30 minutes here. That is why it is up here. So which means that this is on the November 10. You can see it's November 10. You look at daily again, okay, that the price is already up, or the index, or sorry, the price here is already show you there's already uptrend since 3rd November. So which means that the price is already up. Now, as we use 30 minutes, and when the price above this cross the middle line or 20N, that is what we call that the price is up. That is where we enter the market using the short-term trading. But this kind of technique, you only can use that if the counter is active. If the counter not active, it becomes like this. And then you have a lot of whipsaw, and then you will lose money. You need to have what we call the uptrend. So which means that you need to see the daily or weekly whether it is uptrend or it is a downtrend. One is uptrend, you have to look at and look for the confluence, which means that daily is up, the 30 minutes also up. Only then you can make money. Next.
All right, so let's go to the next question. So the next question is by Amir Kureira. What if the bar open and close outside Bollinger Band? Is it a signal?
Okay. Usually it's very unlikely. It's very unlikely. It can happen, but then it's very unlikely that the price will open or close beyond the line, because this is a standard deviation. Standard deviation is which means that unless the price is move up very sharply, for example, like here, there's a complete example, like here. Okay, but still, if he's asking whether can the bar or can the price bar, you see, close above this line like envelope, it's very unlikely. But it can be like this, which means that it is the price exit or beyond the upper level of the Bollinger Band. And this is what we call it walk with the band. The Bollinger Band said we call it, the term is walk with the band. Walk with the band means, which means that the price is overextended. And this is usually that we are looking, if you are looking for short-term trading, you see, this is what we are looking for, which means that the price hit the upper band, and usually the price will go higher and higher until it comes back again like this. And this is the one that you are mentioning just now, due to the M pattern, this M pattern. See, this is a low one. The lower is higher. Where is my? Let's see. No highlighter brush. Okay, this is as you can see, there is here and here. This one and this no, it's like this. Like this. You see this one, this and higher and lower. So you can see this one is outside and this inside. So it's telling you that the volatility is getting lower. It's not telling you that the price is going down, but the volatility is getting lower. That's what you mean. Of course, in this case, the price is still higher. I mean, the trend is still going up, you see, because it's still above the 20 days moving average.
All right. The next question is asked by Riza. How do we identify false signals?
How to identify false signal? Wow, that is direction to ask to answer. You see, it's not easy to answer. It's like this. Yeah. Okay, it's like this. We don't care about whether it is a false signal or not. But the most important is that our trading system, or how that you trade, how you trade. When we trade, the first thing that you have to establish is that one is that your entry. Okay, when is your entry, or what is the condition of your entry? Okay? So, for example, like I explained to you for the past maybe about almost 1 hour, is that how to enter the market by using this Bollinger Band. So, let's say now, let's say you're using that to enter as Bollinger Band. For example, like here in Z, let's say, for example, okay, my entry rules is that when the price overextended, that will be my entry rule. Okay, one. Once you have established your entry rule, okay, of course, the first one before that is that you have to establish is that what is your trading time frame? Are you a long-term trader, or you are a short-term trader, or you are a scalper, or you are intraday traders, or what is it? What up to you, basically. So once you establish that, whether, let's say that, for example, now in this case, you are a short-term trader. What's your time frame? Okay, let's say, for example, like 2 weeks or 1 month. Okay, 2 weeks to 1 month. That is your time frame. So next one, what is your entry requirement? So your entry requirement is that, for example, in this case, okay, they said overextended, for example. Okay, so which means that the price overextended, only that you buy. Okay, now the third one is that if case that you are wrong, what is your stop loss level? See? So let's say now, for example, okay, I'll use a percentage stop loss level. Percentage. So which means I use filter. For example, like if it dropped 5% from my capital, for example, let's say, for example, like this way, for easy example. If I buy, or my betting size, 10,000 ringgit, okay, so which means that I buy, every time that I buy 10,000, 10,000, 10,000. And I'm willing to risk my capital 500 ringgit, for example. You see? So if the price dropped and you lost 500, that you close your position. That will be a better strategy rather than we keep on thinking, if I buy, what happened if I'm wrong? If I buy, is it a false signal? No. Instead of you're thinking of you're worrying about whether it's a false signal or not, but you control something that you can control. We cannot control the market. Let's say now today, for example, okay, with all of this, our knowledge whatsoever. Okay, now the next question. Yes, the price is going up. The next question is, tomorrow is going up or going down? Can anybody answer me or not? Nobody can answer. Nobody can answer that is the price tomorrow is going up or going down. So instead of we are worrying whether the price is going up or going down tomorrow, we put our what we call is our rules of trading. Let's say, for example, like this. Now, let's say now the price yesterday, today's close 349.5. Okay, 349. Okay, now if you buy today, let's say now if the price drop to 330, for example. So that is, you put your benchmark. If you drop 330, which means that is the total amount of risk that you are willing to take. So that is much better rather than you're thinking, is it a false signal or not, and all that. See? So that is how that I use, or that how is the rules of my trade. And rather than I'm worried about whether is this a false signal or not. No, I don't know about that. As long as the price or the signal is there, so that's it. We take it. And if something goes wrong, then we stop loss. But we determine or predetermine our stop loss before we enter the market.
Wisely said, Tuan.
Yes, control something that you can control. You cannot control the market, but you can control your action. You buy and sell, that is your action. So you control our action. Don't try to control the market.
Yeah, precisely. Know where to do risk management.
Yes.
All right. So the next question is by Siti Nurbaya. So if we use Bollinger Band as a basis for entry, do we still need to identify the type of candlesticks? For example, like 3 white soldiers or 3 black crows for continuation pattern, or we just concentrate on the small candlestick approach, approaching the middle band and wait for the breakout?
Okay, good question. Okay. There are a lot of techniques. There are hundreds of techniques for us to enter the market. and also to exit the market. So you have to choose one or two. That's the most of your trading plan, or what is your strategy of entry and your strategy of exit. Don't use everything, and don't combine. There are so many things inside your trading system, because you will get confused. See? For example, okay, now let's say now you want to use this Bollinger Band. See? So now you use Bollinger Band. Okay, you decide what to do. Okay, when is your buy? Usually, when we use any kind of trend following system, the first thing we look at is the trend first. So the question you got to ask is, the trend is up or trend is down? One. Second is that the next question is that, where is your entry? The entry, either it is a reversal or it is a breakout. You see, any kind of system we use the same thing. Either it is reversal or it's a breakout. When we talk about what we call overextend like this, you see, what is it? It is a breakout. It's a breakout. So it's a breakout. So now it's a breakout. So let's say now you said trend is up, I buy on breakout. So it's breakout, they said you buy. Okay, you enter the market because it's fulfill your trading condition. Okay, that is entry. So next one is that you must also have your exit rules. What is your exit rules? Yeah. One, of course, is your stop loss, you see, or you can use your stop loss also as a exit rules, or what we call which means that, for example, like this way. Okay, let's say now your exit rule is that when it drop the price, either some people they use 2 days rules, which means that if the price drop for 2 days, they'll sell. Or we use a percentage rule. Let's say, for example, like the price dropped 2% or 5%, and they will sell. So you can use that also for the selling or for your exit strategy. But the most important is that you must have your own entry strategy and also exit strategy. What technique that they use is not really important. You can use Bollinger Band, you can use candlestick, doesn't matter. See, but don't combine everything inside, there you get confused. Of course, for example, like if the way of my way of trading also is that I use a different set of rules, which means that I use a different technique of entry and I use a different technique of selling. Why? Why? Because usually you see that the market, you see, market is that it takes time to develop. Or in other words, it takes time for the market to go up, but it is very fast for the price to come down. So we use a slower technique to buy and we use a fast technique to sell. Okay. For example, like here, I don't buy when the price is sideways, which means that, for example, when we go, only you buy when the price overextended plus the volume. There's an overextended and the volume. That's only we enter. Is it late? Yes, it is late. It is late. It is late. Not the first signal is turned around, but then it is a safer. When we sell, the first signal is going down, we exit already. You see, so because this the maxim is like this. You see, enter late, fast out. You see, you enter late, which means that you buy confirm, or we said buy when it's confirmation and sell when there's a rumors, or we call it rumors, but then in the market or in the chart, we call it when there is a signal, or even it's not confirmed yet, but we get out already. Because we can always enter again the market if we see that the price to move up. So we always say, come in late, but we get out early. And basically in the trading, that all of this technique, you see, maybe it's about 20 or 30% of the success of your trading. The most important is that one is your psychology, or how you control your emotion. Second is your money management. These two is more important than the timing, and also the stock selections.
All right. So thank you so much, Tuan Haji Zainal, for doing this webinar, which is a short-term trading using Bollinger Band for us. All right. So let me proceed to my slide. So thank you so much, Tuan.
Welcome, welcome.